Hello, start. Okay. Okay. Good morning and welcome to another live session with Bullsmart. So, in today's webinar, we have with us Mr. Abhishek Gupta, who works as the compliance at Bullsmart. Welcome, sir. Welcome to today's live. So, we have seen the trend of companies caring for the environment in the sustainability practices. Then we moved on to something known as the social responsible investing and social responsible practices in companies. Then came the trend of ESG. So the topic for today's webinar is ESG, and we will start with you, sir. So what is ESG according to you, and why it is so important for the companies?
Yeah, first of all, thank you so much for having me here, Anshuman. I think this is a very, very important topic, ESG, nowadays, because most of the organization, in fact, all the organization putting this thing in their agenda to put the ESG on some higher notes so that they can give the good services to the investors. And if the organizations are ESG compliant, I think this is giving a good sign to the investors so that investor can invest in those companies because investors are very well aware of that those companies are having a ESG model. Because all the investors, because nowadays investors are very much aware whenever they are investing into the market through any medium. If they are investing on their own, obviously they are searching the company's performance, their growth, and if they are having a proper ESG model at their end or not. These all things are very essential nowadays because of awareness in the industry. So since investors are having a very good approach, they are having a good allocation of their fund, whatever the savings they are having in their hand, they are having a proper allocation so that they can invest according to the need and the short-term requirement. So whatever the amount they are having for the long-term investment, they are investing on their own on those companies where companies are giving a good profit and they are having a good growth prospect down the line. So while allocating the fund, investors, seeing that companies are having a those all kind of things like climate change and corporate governance, those all things are very, very important nowadays. So if the companies are having a good model, good corporate governance at their hand, and from the regulatory end, they are following all the rules and regulations for if they are in a different industries like in FMCG sector. So in FMCG sectors, they are having a very good model while giving the services to the client. Similarly, they are into in some construction company like L&T or some other companies, big companies. They are having a very good governance at their hand, so investors can understand, okay, they are, they are very much aware of the climate change and while protection and while having a relationship with the other stakeholders, they are keeping all those things on priority. So management is focusing on those things. I think this is a clear sign and the indication goes to the investors so that investor can understand, okay, these all companies are good. Uh, Apart from the growth perspective, apart from the financials of those companies, they are taking care of the ESG factors. So that is a kind of a convincing factor to the investors while investing into the market. So those all things are very, very essential while investing into the mutual fund or mutual funds related other products, so that investor can have a good amount of return over a period of time. Similarly, some other factors related to the management, how importance they are giving to the investors, what kind of a relationship they are having with the employees, with the suppliers, with the other stakeholders, shareholders. If the companies are giving equal preferences to all these factors, I think this is very good model for those companies. And investors can also see that they are giving equal importance, they are having a very good relationship with the employees, they are giving equal importance to the suppliers, other stakeholders, so that they are going to retain the clients, they are going to retain the business in terms of those, because of they are having a very good relationship with all other stakeholders. So these are the one of the main factor nowadays while generating the revenue. investors are looking all these factors in a very closed way, that company is going to generate the similar kind of a return what they have given in the past. Why? Because of the supplier relationship, because of the clients and all other kind of allocations they are having in this place. So that is one kind of signal goes to that client, and the clients are also very much assured that we are going to retain our business, we are going to develop a long relationship, long business relationship with the company, and the way we have grown with the company, this is going to be continued over a period of time. So for selecting the sector, for selecting the ESG indices, I think these all things are very very important for the investors while choosing the sector, while choosing the underlying companies for on that index. Similarly, for the governance sector, like the companies are having a proper audit policies, proper inspection, and accounting system is proper or not. These all things are very very important, because nowadays the regulatories are very strong. I mean, they are giving a proper guidelines every month, or after 1 or 2 months, or a couple of sessions on quarterly basis. They are having some new guidelines because of a business model change, and there some of the discrepancies identified by the regulatory and exchanges. So they are circulating few things on the ground of improvement, or what the next they can implement, so that these things will be in line. Like in audit, inspection, these all things are very very normal. And in case of any these things are identified, I think exchanges and regulatory are going to take a strict action. Because in last if you see a couple of years, right from Satyam, I think you must be knowing Satyam, one of the leading IT company, at that point of time when it was caught for some financial issues in accounting system. So they were not having a right technique while showing the records to the auditors and keeping the right accounting policy at their end. And there were some discrepancies identified on quarterly basis. So on those grounds, it was a huge loss to the investors, and regulatory took a strict action on that. Multiple things were implemented so that things will not get repeated. So I think these all things are very very important while selecting the the index or any company. Since investors are very much aware, they always used to check all these facts and then go for their investment. So I think these all factors are equally important as the financials of the company, I feel, Anshuman.
Yeah. So you beautifully explained what is ESG and why it's important for the companies. So coming to it, what are the options available for an investor to invest in ESG, or what are the different types of ESG investing that is available in the market?
Yeah. First of all, I mean, if the cluster of investors are having a different view, some some cluster of investors who used to invest in a large caps only, some they are having a short term plan. They are having a proper allocation of funds. So this is always advisable whenever you are investing into the market. First of all, you need to check your financial. First of all, you need to check your needs. Just divide your need and investment plan according to the requirements which you may come over a period of time on short term basis or long term basis. Have a proper allocation of fund, then go for an investment. So this is very very important, and I want to give a message to all the investors. Whenever you are investing into the market, you need to understand your requirement first. Based on your requirement, you need to check your funds, that how much the fund you can invest into the market, then decide a product. So when you are deciding a product, I think you need to check along with the financial of the company. Apart from this ESG factor, if they are applying those factors in a proper way, I think this is a double check the company's performance, company's growth, and how it is going to give the delivery for coming 3 to 5 years, what kind of a projects they are having. So these all things are very very important while investing to the market. So when you are allocating the fund, suppose you are investing into the market 20% with a large cap. So almost 70 to 80% large cap companies are having a very good ESG model. They are maintaining all the records, whatever the regulatories are suggested, they are doing all those things, which gives a clear signal to the investors to have a good perception about the company, that company is ESG compliant and they are just following all the rules and regulation. They are doing the good things for all the stakeholders, for all the investors. So I think these all is a very good sign while having any kind of an allocation for that particular kind of investment. As far as type is concerned, I think in ESG there are three major categories. One is ESG mutual fund, similarly ESG indexes, and ESG ETF also. Investors are having a choices to invest into the market. So if they are willing to invest directly into the market, I think ESG ETFs are more suitable to the investors, wherein they are having market timing. On market timing, they can just put the quote and whatever ESG index they want to invest, they can select the particular index and invest on their own. Because in ETF there are few advantages, few cons, also few disadvantages as well. Wherein advantages part is concerned, if they the investors are very well aware of the investment pattern, if they are investing in the companies individually on their own, similarly they can just select the ESG indexes or ESG ETF. They can check the underline of that index if they are convinced, and they can check the company's performance as well, and they can invest on their own based on the real time NAV based prices. If they are not convinced, they can just put the order limit as well. So that is a flexibility for the investors where they can invest on real time basis, and simultaneously they can check the company's performance and the percentage of investment that particular index, how much the percentage is carrying in that particular company. Similarly, they can just check the entire portfolio, entire list of the companies for that index, and they can just check the how much the allocation for that particular company is associated for that index weightage. So according to the weightages, they can understand that the how much my fund is going to be infused in that particular index, and how much it is going to be infused for that particular company. Based on that, they can check the company's performance, what is the dividend record, what is the profit growth, and how they are allocating their fund in the business. They are focusing on the growth of the business, or they are distributing the business in terms of dividend or in terms of bonuses on a regular interval. So I think this is overall in investment perspective. I think completely in investors' hand, they can check the performance of the relative ETFs or index funds also like this only. The only difference in ESG, you can just manage on your own if you are that confident, and if you are tracking the market on a regular basis, on a regular interval, then you can invest through ESG ETFs, where some cost factor definitely lies. As far as the index part is concerned and mutual fund part is concerned, they are having a complete replica of that particular index. Just they are giving expert advice. They are maintaining that mutual fund or index on their own understanding. They are expert on daily basis. They are tracking the entire market, entire industry, as well as the global factors too. So based on that, they are churning the portfolio. They are shifting the fund from one asset class to other asset class so that they can get the maximum return and they can beat the market. So the alpha you need to check. If you're not investing through ETF, then definitely when you are selecting the index fund or any ESG mutual fund, you need to check the alpha of that particular index. If that fund is giving a better return, definitely you need to stick with the fund, because obviously since you hired, you are paying for an investment to the fund manager. Obviously you need to check the returns over a period of time, how much the return they are giving, and those returns are actually greater than the relative index or not. So I think this is a complete investor's choice and understanding. If they are not having a good amount of time in hand to track the entire market, obviously they need to go through mutual fund index. Just they need to check the alpha. That is the very small thing, so that they can check the return and can stick with the investment. Else they can shift the fund to some other relative other mutual funds.
Okay, so you mentioned about regulations regarding ESG. So what are the few major regulations and criteria regarding ESG investing?
Yeah, ESG actually is a it's an emerging model in India. I would like to say, like in most of the countries, especially developed economies, they are having sure shot and uh, it's a regulatory kind of a mandatory or compulsion for those companies. They need to keep all those ESG factors in their companies to make the company standard high. Even in India, I think to some extent, definitely most of the companies are having ESG model, but similarly, there are so many small, companies, small cap companies, wherein they are not, able to follow all these facts and all those, criterias because of market capitalization and the size of the company. So there is a, one common rule like wherein if the net worth is more than 500 crore, all for those companies when net worth is more than 500 crore, turnover is somewhere around 1000 crore, and the profit is coming around 5 crore per annum, like that. In those, I mean, if the companies are fulfilling all these parameters, 2% of the net profit should go for the cause of ESG. So that is a set criteria for those companies. Mostly, I think you must be aware of. I think most of the investors will be knowing that, like Tata and Wipro and all those companies, they are having a very good ESG systems at their hand. They are having a very good charity also. They are contributing a good amount of funds for all those areas, so that the awareness should come to the investors. They can also understand the model of the company. They can also understand the how the company is in spending their part of profit for all these factors, so that the awareness and the investors confidence should continue for those companies. So I think in India, the most of the companies are having such kind of ESG model, wherein those companies though are making such kind of a profits on quarterly basis. So they are having a such a model at their end, so that they can have a good amount of a contribution for the ESG factors, so that the faith will continue for the investors, and they will continue with their investment along with the financials of the company. So I think this criteria is very, very common for the Indian companies as well. Along with this, regulators are also focusing for all those mid cap companies, small cap companies. They are already issuing some guidelines to the companies, so that they can follow these criteria and can serve ESG factors for the betterment of the business and growth.
Leading to my previous question, so on following these criterias and guidelines and the complaints, how the companies are rated on ESG, and what are the some of the agency who rate companies based on their ESG practices?
Yeah, since ESG is very, very important for those companies, I think most of the large companies are having a ESG model at their end, which is giving a very good impression to the investors. As far as the rating part is concerned, MSCI is a Morgan Stanley Capital International who is having a rating system in India as well. So wherein they are having proper check of those companies, they are rating the performance of the companies, how the company is performing for a couple of years, and down the line how it is going to be for I mean, in terms of the entire business model and profit ratios and all other financial ratios, that how the EPS is generated for the company, and based on the projects how it is going to be projected for next 3 to 5 years. So based on that, they are having a very good rating system, wherein, like, if the companies are meeting all these criteria, they are falling in AAA category. So, if the investors are not very much aware of those things, they can simply check the rating of those companies, that, okay, fine, these set of my companies, or these set of my companies who are lying in this particular index or particular ETF, wherein, MSCI has given a this rating. So simply by rating, they can understand the company's performance in all aspects is very good. I need not to, spend so much amount of time to understand the company's performance, growth, this and that. Since MSCI has given this rating, that means company is having everything fair in terms of policies, in terms of regulation, in terms of financials, in terms of all the projects and everything. So they can simply check the AAA rating. That means these all companies are performing good and they are having a good growth prospects as well. So similarly, they are having a criteria based on the rating. Similarly, double A rating and then A rating comes top to bottom. Then triple B, if they are meeting some of, they are not able to meet some of the criterias, and they are not having a good financial as there, and they are spectacle in few of the areas which are not going to be as same as they have delivered in the past. So those companies fall in triple B. And if the companies are not performing well, they are not adhering with the policies and what are the guidelines given by the regulations and SEBI. Identifying those facts may fall in triple B or something, in that category. So obviously you need to, get rid of all those companies, who are not having a good record, track record, or not projects. Just by reading, they can also understand that, okay, fine. Since the financials are not good and they are not in any growth prospects, even they're not following some of the regulatory guidelines too. So obviously they are falling in those, bad categories. So by just identifying the rating, you can understand the performance and how the companies are going to give in terms of profitability down the line. So I think these all things are very, very important to understand from the investor's point of view.
So over the course of the webinar, you emphasized on the benefits of ESG investing. So on the other side of the coin, there will be some risk associated with ESG investing. So could you explain more about that?
Yeah, since I said like a lot of advantages because investors are having a proper allocation of fund at their hand. So the right practice is, first of all, investor, I am repeating this thing again to all the investors. First of all, you need to understand how much the fund you want to allocate as per the requirement, as per the short term or mid term requirement. First of all, you need to have a proper allocation of your fund. Then you should invest in the market. So while investing in the market, you need to check all these factors which we have discussed earlier, and based on that, you have to have a proper allocation of funds. So similarly, if you are investing in those all facts, I think this all is very, very important. And if you check all those companies who are having a very good ESG model, I think they are always giving a very, very good return. And all those indexes are always giving a better return from the base index. So if you'll check all those companies and all those indexes where underlying of these all ESG compliant companies are falling, they are giving a better return as compared to the base index. So while having allocation, the some portion of fund you are investing in those indexes, I think you need not to worry because those all companies are good rated companies and they are obviously going to give and beat the base index. So that is the first thing, one kind of assurance with the, investors while investing into the market. So I think this is very good practice you need to keep while investing into the market. At the same time, there are few areas where, I mean, from the market perspective, you will see that some of the mid cap companies and some of the small cap companies are not able to follow ESG guidelines, ESG norms because of internal reason, because of the financial reason and market cap size, and they are not having a large capital wherein they are having this much more than 500 crore of a net worth and 1000 crore of crore of turnover. Then obviously profit will affect in those all things. So now SEBI has started to issue a new guidelines to those companies also so that they can cover those mid cap companies and small cap companies also so that they can also have such kind of a model based on some different parameters. So I think this is a great initiative started by the regulatories for those companies who are not falling in these criteria. So I think down the line we will see some more some more companies from mid cap, from small cap will join, and they are going to contribute a great part as far as the ESG contribution is concerned. And that is the only thing. This is very important to grow the economy. So if you are having more companies who are coming from a mid cap and a small cap and joining the industry, they are giving a good returns. So I think this is great for the evolvement of the entire industry and entire business model too.
So, coming to the risk of the ESG practices, so I arrived at an interesting question. We, as you have mentioned earlier, that ESG practices affect the market. So my question is, to what extent it affects the market, and can investors use ESG practices to manage their risk in the market to their advantage?
Yeah, obviously. That's why I always, prefer to have a proper amount of investment. How much the percentage you want to invest in one type of investment. Likewise, suppose a one investor, who is willing to invest some amount of a portion just for a longer term. So when you are thinking to invest for a longer term, then obviously you will go for some large cap where the returns are little bit less as compared to the mid cap or small caps, but your investment is safe. So whenever you're investing in the market, you need to check the what kind of a return you want and in what period you want. So if you're having a long-term horizon in your hand, then obviously you need to invest in large cap, where you need to check all these discussed factors while investing. I think risk is very, very important in ESG also, because if you see, current scenario in Europe, what is happening? Everybody know that, Europe is, having a very tough phase from last 1 year or more than 1 year, wherein the supply chain is a big factor. Supply chain disruption is a big challenge nowadays, because of most of the companies, like in oil companies, one country explore the oil, and second country is having a refinery. They are having a export and some machineries, and they are lying in those companies, they are having a refinery. Similarly, distribution is happening in some other company. So entire like subcontinent in those companies are quite affected. From last 1 year it is happening. Like in oil sector, supply chain is a big big thing which is highly affected because of the movement of all those things. Similarly, for like if you see the Tata company, Tata Motors. One country is, having a steel plant, and second is manufacturing. Third country is doing two related things. Fourth, country is in assembling and those all things. So the entire supply chain is getting affected. Similarly, like so many industries are having a great affection only because of these all factors. So that's why ESG is very, very important. We need to understand that how this all is going to impact if anything happens unexpectedly, and how we are going to manage the risk, how the company is going to manage the risk, how the industry is going to manage the risk. So this is the real example by which you can understand that companies are having a very good model at their end. I think these all things can be managed properly. So that's why, you need to understand your allocation of fund, your return and horizon. Based on that, you need to start putting your money in a various sectors, so that you can meet entire requirements on a periodical basis as per the defined criteria what you have set for your next 3 to 5 years, or whatever the horizon you are having in your hand.
Beautifully explained by you. So as you know that the ultimate aim for every company is profit generation, and so how does ESG investing helps companies to reduce their cost?
Yeah, obviously, because the benefit of this thing, if you are applying all these things, the trust. That is very important because nowadays investors are very much aware. They are following social media, they are seeing news, they are having very good networking. So based on that, they are very much aware of the products, of the investments, of the companies. So I think nowadays we are on some better side where investors are very well educated and they are having a readily information of their company, of the investment and everything. So I think this all is directly affecting and giving advantage to the companies as well, so that whenever they are putting all these some additional amount of fund for all these factors, they also know that my investors are intact with my investments because they having a good amount of a trust. We are having this model, we are giving a good return, we are having a ESG models, they are going to maintain their trust with us, and we are in a better position to deliver our growth and profitability in all sense for the what are the projects they are having for 3 to 5 years or 10 years, whatever the plans and projects they are having in their hand. So from that angle, they are not going to lose anything. Investors are not going to lose. Obviously, there might be some churning on portfolio, that is fine, but at the same time, only because of this awareness and everything, they are having exponential amount of investors may come with the additional funds from the market. So that kind of a projections and estimations they are having at their end, and from the management, and they are having all these calculations, and based on that they are generating the revenue, they are taking the projects and developing the entire business model and everything. As far as these are things like in one organization, if you can see like HR team or any finance team. So if say for HR team, is they're having good good amount of accounting model, good amount of database at their end. They are having a proper discussion within the management, and they understand the entire requirement, what kind of resources they want, what kind of industry uh, uh, industry experience, and those all things. Based on that, they are, if they are having a very good model at their end, they can just assess the requirement of the organization and expertise and the year of experience what they want. If they are having all these things in a proper way, they can, I think, save the cost rather than if I mean if they are investing like anything, and then obviously it will affect a cost. Similarly for finance also, in finance, what are those areas where we can put the fund to grow the business. So if we are putting the some amount of fund just for the perspective of some additional supply or some additional kind of projects, I mean in those companies where they are not going to get some higher amount of revenue. So I think those all things are not going to work. So first of all, we need to understand that what kind of a model we are having in the organization and what kind of resources if we want, and which are actually to contribute to the business growth and all. Then only we need to invest that additional amount of fund just for the growth of the business. So I think these all things are very important. Likewise, in every organization, they are having a ESG model. If they are having a proper discussion, proper a proper understanding about the requirement and all, based on that they are investing with some additional fund, I think that always gives a better return. So in any industry, I mean, in FMCG sector, or likewise, I know like many companies like L&T and all. So they are having a very good model at their end. So whenever they are having a new projects, they understand, okay, how much the estimation is going to have in terms of a time, in terms of resources, how much the fund we are taking for this project, is it actually worth or not over a period of time? Because say for this project is going to be completed in next 2 or 3 years. So they are checking everything. They are checking the inflation factor, they are checking the cost factors, if any kind of a disruption comes, so in that phase how we are going to manage the things. So all estimation they have, then only they infuse some additional fund and manage the entire operation and everything. So I think this plays very important role, not for the organization, for the investors as well. So I think these all things are very important while investing. You need to understand all these things in all aspect before investing.
So thank you, sir. So with this, we have come to the end of our session. Thank you, sir, for allocating us your precious time out of your busy schedule. So, any parting comments for our audience before we leave?
Yeah, simply I would like to say, like, always whenever you are investing, I mean, investors should always be aware of the market. And before investing, I mean, if you can just track the market on daily basis, I would like to prefer you guys need to have a good interest in the market. Though you are investing through the mutual fund or through the ETF on your own, if you are tracking the market, I think this is always always help you for allocation of funds, for the financial financial planning and everything. If you cannot afford that much amount of time, then obviously just select a good good mutual fund and just invest through the mutual fund, but be with the market. I think market is going to give us a good amount of a return, whatever we have seen in last 3 to 5 years. That is for sure. If not this amount of return, definitely we are going to have some more amount of return over a period of 5 to 10 years. This kind of a policies we are having at our end. So thank you.
So with that, we have come to the end of the session. So we will be back with another live session with new guests, new topics. Till then, thank you.
Thanks.